Myself in the kitchen.
Yo, what's going on, guys? Welcome back. Mitchell Waxler here, and in today's video, I'm going to be sharing with you all on what exactly I use the Fibonacci tool for. There's really only three things that I use it for, so let's just go ahead and let's dive right in. All right, so number one, I use the Fibonacci tool for measuring the 50% of our order block. So with what we have going on right now, we have this last down candle before the up move. So this candle is what I would be using my Fibonacci tool on. And when you're measuring order blocks, you do from the open to the close, which is the body of the candle. And from there, you're going to take that 50% and you take that horizontal ray and you draw that into the future. Okay. The reason why is because that simply is going to be entry number 2. And it's the 50% because 50% is where a majority of the volume is at. So smart money likes to pull it to where a lot of that volume is at and then shoot it the opposite direction. So that's entry number 2. Entry number 1 is obviously the open of that candle. All right. So the last down candle before the up move. So right there, you have entry 1 and entry 2 at the 50%. So that's, the first thing that I use the Fibonacci tool for. The second thing I use it for is simply going to be discount and premium market. So anything in a discount market, you're going to be looking to buy the market. Anything in a premium market, you're simply going to be looking to sell the market. Okay, if it's in a premium, you're never looking to buy, and vice versa. A discount, you're never looking to sell. So how do you find, this area? I have another video on my YouTube channel. Check it out. I break it down a little bit more in depth. But real quick, you're going to find a trend, whether it be an uptrend or a downtrend. In this instance, we're going to take from this low to this high over here, and we're going to take it from the body. So we're going to take it from the very low in the body, from there all the way up to the top, right there in the body as well. Now, to find out the discount and the premium zones, very simple. You're going to take the square tool and draw a little zone at that 50% mark. Now, once you identify that, everything below the 50% is going to be a discount market. Everything above that is going to be a premium market. So right now, if we were looking to enter into the market, we should really only be looking for sells. I know we're just looking at the hour time frame, but in this scenario, sells only. And then the third thing I use the Fibonacci tool is for where are we expecting the market to pull back to. Now, me personally, I like anywhere from the 70% to the 88.6% area. So as we identify that, as you can see, we have the 70% and all the way to the 88.6%. So I'm going to go ahead and I'm going to delete the Fibonacci tool, right? But this is that area where we're looking for the market to come back to before we expect that overall continuation to the upside. But guys, you must understand that having that kill zone, that's only one confirmation. With trading, you need multiple confirmations. The more confirmations you have, the higher likelihood that the market's going to do what you want it to do. Okay, but you want to start noticing things. With this kill zone that we have from the Fibonacci, what's right below that? We have our kill zone, our order block. So another area where we're looking to capitalize on. So when the market comes down to the top of this Fibonacci area kill zone, I'm not really going to be looking to enter just yet. The reason why is because we have more confirmations and more confluence down over in this range. So I'm going to be patient, wait for it to come down a little bit deeper. My favorite one is that 88.6%, which is this green line, the very bottom of the blue box, right? That's that 88.6%. So that's that main area that I'm going to be looking at. And notice one more thing, okay? Notice we have a low right here. And what is always below lows? Money, liquidity. So we're expecting maybe it's just a little wick. Maybe it's a couple pips below before it shoots back up. It's going to be different every time, but I would expect the market to come a little bit below that area. So entry number 2, with everything we have lined up, is looking like a great area for the best possible entry. And if you guys have been studying smart money, when you enter in the kill zone of the order block, that stop loss goes right below the wicks of that order block. So your stop loss would go right below these wicks right here. And I will draw that up for you so you guys can see, right below those wicks. And let's go ahead. Let's just play this out real quick so you guys can see exactly what happened. All right. So the market shot down very quickly, and like we predicted, it went below the lows. It came in the order block. It tapped the 88.6. It never really broke through completely. It did break and close, but the candle after that immediately came back up, closed right back in it. You could have entered right there if you didn't initially enter down on the kill zone. That second entry could have entered right there once it engulfed. And let's play this out so you guys can see the finished product. Boom, we'll leave it at that. Your take profit would have been these highs right here. Boom, take profit. And that was that, guys. Those were the three reasons, or the three things that I use when it comes to Fibonacci. You don't need to complicate it. It's a pretty simple tool to use, but don't overcomplicate it, guys. If you have any questions, feel free to reach out to me. If you haven't yet, please hit the subscribe button, hit the bell. I'm going to have more content coming out soon. So much love. Let's work.